Well, let's turn our eye to some global action as well. William Lee is Chief Economist and Managing Director at Global Economic Advisors. He's with us. William, Happy New Year. Great to see you. 1st Jan.
Happy New Year to you guys. Thank you for having me.
You're looking
and
bright.
By the way, I am very impressed that you guys are the only markets that will be open today. As the rest of the world recovers from their over-celebration, you guys will be setting the path.
Why are you impressed? Because we were wondering we'd follow the globe and perhaps taken off on 1st Jan as well.
Now that Manu,
well, I think
now that you're trading, might as well make a virtue out of it, right?
100%. 100%.
Absolutely.
William, so what's the prognosis? A new one and same as the old one in terms of market performance, or you think something will change?
I think the emphasis is going to shift. Last year we started with trade tensions and fears of stagflation and whatever other inflation you care to add in there. And it turned out over the last year that those fears were unwarranted. And in fact, I think what we have seen in the data that have come out so far, what little data there is that the U.S. is now undergoing a productivity-led growth, a productivity-led expansion, and that's probably the best kind of expansion we can have. And it's not just the U.S., but it's spreading throughout the world. Market performance in global markets have been even better than that in the United States, and I think part of that is because the outlook for productivity is so good, not only in the United States, but also in the rest of the world. And I think that's the key to the investment strategies going forward. Trade tensions will dissolve into incentives for more and more capital flows across countries. Instead of worrying about tariffs and goods and services and trade flows and things like that, I think President Trump has made it clear that the future is with capital flows and investments in the markets in which you want to sell. And I think that's the message I think that most investors are trying to get. And you see the overinvestment in AI and AI infrastructure is to capitalize on being able to bring productivity boosts to every marketplace in the world where you're producing stuff. And you want to put your production closer to where your markets are ultimately going to be selling.
All right. So you touched upon AI. I just wanted your thoughts on two things. One, 2026, do you think now that the calendar is reset, people perhaps recalibrate their investments in AI? Towards the end of the year, we were questioning, the financial validation of these, investments that people were making and the sort of incestuous capital deployment in all these companies. So does that reset? If you could give a call on that. And secondly, on the global interest rate scenario, do you think the Fed is behind the curve?
I think the global reset on AI is about computation. How much computation power do you really need to get the benefits and productivity growth that you want from AI and AI technologies? And I think people are starting to ask the question, first we have to see the apps that will be using these computational infrastructure that's being put in place. And we haven't seen a lot of those apps yet. And there's a question about whether or not the benefits will flow to the working man, to the everyman, to the consumer. And I've become much more confident over the last several weeks that the benefits are not only going to accrue to everyone, they're already accruing to everyone. I just ran to an electrician who came to my house, and he was doing some work for me. And while he was there, he was using his phone to schedule his next 3 appointments for the next 3 days. And I said, who are you talking to, your assistant? He said, no, I'm talking to my app. I have an AI app that's scheduling all of my appointments and optimizing the routes by which I will be traveling and optimizing my bids for my future jobs. And I have been able to do much more work now than I've ever been able to do before. That's an electrician, right? That is a blue collar worker who's now using AI-based apps in order to boost his own productivity. That to me is just a slight window into what's to come. And I'm very optimistic that the productivity changes that we'll be seeing going forward will be even better than what we've seen today. Because remember, the strong productivity growth we've had up until now in the United States even has been non-AI based. The AI stuff is yet to come out. And my electrician example, I think, is just the tip of the iceberg for what's to come.
Yeah, no, absolutely. And of course, I mean, lots of economists adding a couple of percentage points to economic growth starting sometime in the near future on a durable basis because of this AI productivity growth, etc. I mean, how much it will be, we don't know. But It's certainly, I mean, we can see it for ourselves in our work, and as you said, gave that wonderful example as well. William, you know, sometimes it's what's not done well does well. I mean, it's just a bit of, it's as simple as that. Of course, you need other conditions as well for what's not done to do well. Here in India, we've had a bit of a poor year compared to other markets. You think things can turn, or what is the necessary condition for that to happen, in your opinion?
I think a lot of areas in the world, not just India, there's a lot of uncertainty as to how quickly technology will be spreading in its applications. As was earlier mentioned, I didn't mention the interest rate issue. Are interest rates really too high? Is the tension in the high rates that we see around the world, mainly because of the huge amount of public debt that's being issued, is that going to be crowding out the kind of investments from the productivity gains that we are hoping to see? That really is the crux of the tension. And for India, we have on top of that political risk. Not only in India, but in the United States, the whole issue of sharing the benefits of all of these new technologies is something that is yet to be done. India, I think, is one of the places in the world that I've always mentioned to you will be the beneficiaries of the capital flows, where investors will come and make use of the resources in India to be able to produce the stuff that the rest of the world needs to put in place these high productivity investments. But unfortunately, India has got to straighten out its own political act and be able to make it clear to Western investors that it will welcome foreign investments. It will open its markets to trade. The political barriers that have been put in place over the many decades up until now will be pushed aside for the benefit of the people, for the benefit of the Indians and Indian investors, to be able to make use of the kind of productivity changes that are going on in the rest of the world, and the kind of market returns that we're seeing in the rest of the world. So for me, the problem in India right now is not so much economic, but political.
Political, if you could explain a little more on that, because, you know, the one thing that everyone's really happy about in India is the political continuity, the stability at the top.
Absolutely. And Premier Modi has really done a phenomenal job of bringing about India and placing it as one of the major countries in the world that'll be the center of growth. Well, and I said earlier on that India really had the opportunity to ask almost anything from the United States and get everything. But unfortunately, over the last year, a lot of the decisions to place India strategically in the nexus of China, Russia, Iran, and the United States has really caused investors, I think certainly Western investors, to question whether or not it's viable to put a lot of capital into India unless it's clear that they will be siding with the West. And I think you yourselves have asked many of these questions, and those are yet to be resolved, because even though it may be clear in some minds that Indian policy is pro-West and pro-investment, I don't think it's convinced everyone yet.
There's only one man to convince, William.
A group of people.
A group of people. Thanks very much. Good speaking with you, and wish you all the best for the new year. I hope you have a good one, William.
Happy New Year to you guys.
Thank you for joining us on The First. Thank you.